What's up, guys? This is Babe. We are coming to you today to just talk about the basics. We hadn't talked about the basics in a long time because I've been trading now for quite a while. But we are going to talk about the basics. Sometimes you just got to go back to the basics. And there are a few people that are interested in Forex, but they don't really know what to do. What is it? How do I get in the market? And everybody always wants to say, hey, you got to pay me, blah, blah, blah. Well, I want people to get an idea of what it's like to actually get into trading. So give me, please, about 20, 25 minutes of your time because we're going to cover a lot. And I want you to make sure, take out your notepads because I'm going to quiz you later. Okay, so let's talk about Forex. What is it? So at the end of the day, we are going to talk about truly, truly, truly basics, and I'm going to give you a very simple breakdown on what it is. Okay, now let's give you this analogy. If you came over here to see me in Dubai, and let's say you came over, it's time for you to get off the plane and you get ready, you have cash, you want to turn your cash in and you want to turn your cash in and use it, get the currency in Dubai. All right. So you go to the counter, you give your $100 and you get 400 and the dirham in UAE is dirham. So you get 400 dirham back. Okay. Now you get your 400 dirham, you have your vacation, we hang out, but you don't end up spending your cash. Okay. And then it's time for you to go back, let's say to the US. So you get ready to exchange your dirhams back to USD. And when you get ready to change it back, one of two things happens. Okay. You either get you get 120 dirhams back. Let's say you get dollars. You get more dollars back. Okay. That means that the market fluctuated, price fluctuated, currency fluctuated while you were over here in UAE. So you get more money back. Okay. So the USD must have been great, while you were here. You end up getting more money back. Well, let's say it goes the opposite way. You get in, you go to cash your money back and you get $90 back. So USD didn't do so well while you were over here in UAE. This is drastic numbers, guys. But it's just meaning to show you an example. Okay. So let's say you get $90 back, and when you get ready to get $90 back, that means that USD, kind of went down on the currency exchange, and you end up losing money. Okay. But as traders in the market, we make money both ways. Now, that's what we do essentially. Okay. We capitalize on the difference of currencies in the market. When they are going up and down and up and down, money is always moving. That's why so many people are interested in getting into Forex because money always moves. Okay. It's always moving. We're always in the market making money. Okay. So that was USD against AED, but you'll never probably see that pair because AED, it's not that serious. But you will see pairs. When I say pairs, we're going to talk about that. When I say pairs, we're talking about like USD against JPY, which is a Japanese yen, or USD against the euro, okay, would be euro USD, okay? So whenever you hear me talk about a currency pair, that is what we're talking about, okay? And I'm going to show you as traders how we make money both ways. But the first thing we need to do is find out the market moves in three different ways, and we need to look at that. So that means that those things that you see that maybe scare you or intimidate you or pique your curiosity, you want to know what they are. What are those charts? So I'm going to move myself out of the way. All right. Because I'm not important, right? It's price. Price is what's important. All right. All right. Now, what we're looking at is a chart. And this chart may look crazy to you. It may look, like an EKG machine, or what are all these crazy lines? Well, let's talk about the crazy lines you see and how we're going to demystify it for you and show you what it actually means, okay? Because you can see these anywhere, guys. And, it's really just, as I say, basic geometry, really, up and down and sideways. All right. Now, what are these things? These things are called candlesticks, and they represent price and they represent time. Now, a chart is read from left to right. So what you see right here is present. Today is October the 9th for me. It is almost 4 p.m. Okay, October the 9th, almost 4 p.m. for me. All right. So this is current. This is what price is doing. You see the countdown clock right here, counting down 10:19, 10:18. Okay, this is current price. So everything back here is what has already happened. But I came here at this moment in time because this was a great depiction of what I wanted to talk about. Okay. So remember, these are candlesticks and they represent price. Remember, I also said they represent time. Each one of these candlesticks represent a time. And you're like, well, how much time does it represent? If you look up here, we are on 15M. That stands for 15 minutes. Now, each candlestick also represents a momentum. So there's a buying momentum, there's a selling momentum, and there's also a really not momentum, but just a market that moves sideways. Okay. Now, green or blue, depending on how the chart is set up, represents buying. So because we're on the 15-minute time frame, it means that this candle, even this little candle, even this little one right here, it represents 15 minutes of buying. Okay? Now, same on the red side. The red represents selling. So red means, this means the market was selling for 15 minutes. It's a little bit longer than this one right here. Still, market is selling for 15, selling for 15. Now, okay, because we're on the 15-minute time, what we call time frame. Please write that down. 15-minute time frame. Now, we have other time frames that we could go on. We have the 30-minute, the 1 hour. If we switch to the 1 hour, it just simply means the same thing. It means that one of these candles represents 1 hour of time. The market is selling for 1 hour, buying for 1 hour. It's just a matter of going on a time frame. Okay. Now you say, well, why would I change time frames? It really depends on what type of trader you are or you become. Okay. You say, I just want to get in and out the market and I just want to be done. Well, you're going to go on the smaller time frames. You're going to be on the 1 minute, the 3 minute, and the 5 minute. And you say, well, babe, I want to get in and I want to stay in for days, whatever, for all day or whatever, then you will be looking at the higher time frames. Okay. Now that's something we'll talk about later and what type of trader you will become. But right now, my goal is to get you to see this as a chart you can read, and we're going to get into one trade. Okay. Now, as you can see, I've taken the liberty of putting some words up here so it represents how price moves. Now remember, green means buying, red means selling. And we are looking at a currency pair of USD JPY. So this is United States dollar for the Japanese yen. Now, whenever you are looking at a currency pair, this is called a currency pair. The first currency in our pair is going to be the blue or green candle. Okay? Remember, blue or green, depending on what chart you're looking at, these candlesticks may be blue or green. But usually universal red is, You can set once you become your trader and I become your fabulous mentor, you can set up your, chart however you want. If you want your candles to be purple and you want these to be yellow, that's totally up to you. But for the sake of looking at a chart, green or blue, first currency is represented. Second currency is represented by the red candlesticks. Okay. So if we are in a buying momentum, we are going to see more green candles. If we are in a selling momentum, we are going to see more red candles. Okay? Now, the market moves in 3 different ways. From here to here is buying, bullish, going long, and it's an uptrend. Okay. Now, when you hear somebody say in the market is going long, it's in an uptrend. Well, this is what the market is doing. It's going up, 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 up. All right. That's one movement. All right. Doesn't matter if at this moment we had a little bit of up, a little bit down, a little bit up, a little bit down. It doesn't matter. Price is never just going to go shoot straight up. Okay. It's just like in life. You have to take some breath. You have to take some rest. You have to take a breather. So it's going to go up. It's going to come back, what we call a pullback or a retracement. You'll learn about that later. But then it's going to go up and it's going to pull back a little bit. Then it's going to go up. And then, you had a rally up, but price is now taking a breather. Okay. So that's one of our movements in the market is an uptrend, going long, buying, or bullish. Okay. Now, let's move on over to the other side where the market moves. It moves in a downtrend. Now, remember, as traders, we make money both ways. Okay? Now, if we were to get into the market and we say, okay, well, the market, we know we looked at some indicators. We looked at price action, market structure. So we can say, oh, okay, this is making an M pattern. That's a little bit more advanced. But but we can say, okay, we know the market is getting ready to go down. It is in a downtrend. Okay, that represents a downtrend. Now remember, this is time and it has already happened. Okay, because remember I just showed you before where price was over to the right, that's present. Okay, so let's change this to red. All right, and let's actually change this one to green. All right, so moving down, our market is bearish, selling, going short, or it is a downtrend. All right. So we are going to see more red candles when the market is moving down. When I say price, when I say market, that means that we're in the market. We're looking at price, and we know that price is represented by candlesticks. Okay. So again, market is moving uptrend, going long, buying, bullish. Market is coming down, selling, bearish, going short, downtrend. Okay. Same thing. It's not going to just shoot straight down. It's going to come down, then it's going to go up, then it's going to come down, then it's going to go up. And then the third type of market we want to see, you can say, people say, oh, the market is just ranging. It's consolidating. It's just moving sideways, not really doing too much of anything. This is where we are. We're moving sideways, not really showing much momentum. Okay. And it's consolidating. All right. So we make money in this area too, but that is a little bit more advanced. Okay. So we're not going to go over that. We are going to stick with what we say is our friend. And we always say the trend is our friend, because if a market is going up, we don't want to fight it, but some traders like to. They capitalize on this market, and that's great. But for the sake of beginning, we're going to talk about keeping the trend as our friend. All right, so now we have our market and how it moves. We know exactly how it moves. We know that we are looking at USD/JPY. Let's look at price right now. Okay, so let's fast forward. All this has happened. Look at this ranging. Look, the market is just ranging right now. So, if I was a little, if you were a little bit more advanced, we talk about, oh, well, this market is just ranging. Let's draw it up. And we have what we call, it's sandwiched. It's just gotten smaller and smaller. The movement has gotten smaller and smaller and smaller and smaller and smaller, smaller, smaller. So at some point, price has to break out either way. It has to come up here or it has to go down here. Now, at the end of the day, price is going to do whatever it wants to do. We are just drawing these lines and all this stuff to give us an idea of what price is going to do. Okay. Now, let's approach it like this. You say, well, babe, well, how do I make the money? Okay, all these lines and stuff, all that's great. But, now I know how the market moves. Now I know, when I'm looking at a chart, I'm not so intimidated. I can actually know what the market is doing when I see a chart. Okay, great. How do I make the money? All right. You say, okay, let's just look at this one move here. This move here, remember our 15-minute represents each candlestick, whether it's green or red, whatever, it represents time. All right, so let's say that we got into this market. Let's say we looked at a couple of our indicators. We look at a couple of things setting us up to let us know what price was going to do. And we knew that price was getting ready to sell. Okay, this is what we call an M pattern anyway. So let's come down from here to here. Now you say, okay, babe, well, what money is that? Okay, we got in the market up here at the top and we got in for a sell. We got in our supply zone. So think of trading like this. You're going to buy low and you're going to sell high. Okay, so when we say buy low, that means our demand zone. That means that, just say for instance, the stock of, Apple phone was coming out, the actual physical Apple, the iPhone was coming out and you wanted to get in buying low. So you would buy down here. But then, when it kind of fizzled out, supply is actually there. People are like, oh, I'm trying to sell this off. You would be up here in our supply zone. Okay, so that is how we capitalize both ways. So this move from here to here is 77 pips. Now, oh Lord, babe, now you done said a new word. What is 77 pips? Now you don't count this little number on the end. It is 77 pips from here to here. How that translates to money. But let's talk about what a pip is first. A pip, P-I-P, is represented by points in percentage. Okay. Now I know that's a fancy term, but points in percentage means measuring the distance of price movement. It's measuring the distance of price movement, just like measuring an inch, foot, or yard. Okay. So price movement was from here to here. Okay. And that movement was 77 pips. So if you were in the market, let's say for 10 cents, you would have made $7.70. Wow. Whoa. But let's say for instance, I got into the market with 10 cents. I made $7.70 off of this one move. But let's say you got in for $1. You made $77 in this one move. Okay. Now, or if you got in for $10, you made $770, or $100, you made $7,700. Okay, or 7,700. Yes. Let me get my math right. Okay. So you would have made that. It depends on what your account size is. That and account size we'll talk about account size, and it depends on what you got into the market for. I may have got in for less money. I may have started with less money, because when we get ready to trade, there's the amount of money that you're ready to invest is totally up to you. Totally up to you. Okay. So 77 pips right here in this one move. We say, okay, well, we came back here and let's say we got into this move. Let's say we got into this move for the buy and we rolled this up. Same thing, 77 pips. So now the guys, that worked out just perfect. It's not going to work out like that all the time. Not all the time, but this is what a great formation right here. So I wanted to come right here and show you. So from here to here, same thing. If we got in for a buy, we got in down here, we click buy. How do we get in? 77 pips. We could have made money from here to here. Same thing, 10 cent, dollar. It doesn't have to be even numbers. I'm just saying even numbers for the sake of the video. Okay, so it could have been 12 cent, could have been 15 cent, could have been $2, could have been $3.50, depending on what leverage you were using and lot size you were using to get into the market. Okay, now see this ranging market? See, it's not much going on, but people still capitalize off this little short area right here. Only 27 pips, which is not bad. Not bad at all. But people can capitalize in this market, but like I said, it's a little bit more advanced. Now, we know how the market moves. We know how much money we make in certain moves. How do we put the trade in? All right. So let's say, for instance, we thought that USD JPY was going to continue to go up for a buy. We said, okay, well, I've looked at some indicators, I've checked some market analysis, I've, checked some things, and my arrow ain't all that, I know. But we think that the market is going to continue moving up. So these numbers over here are the actual price of where we are right now. Okay, so we are going to put these numbers into our MT4. Now you say, well, what numbers do we put in? We could actually just get into the market and click buy and just ride it up. But me as a mentor, I would be setting you up for failure if I told you not to put in what is called a stop loss. Okay. Now this may be getting a little bit more advanced, but let's say, for instance, we said, okay, we're going to move up for a buy. I looked at some things. I think it's going to move up for a buy. But like I said earlier, price is going to do what price is going to do, regardless of what line you drew up or, blah, blah, blah. A lot of times when you do your markup, you are correct if you've done your markup and you've done it correctly. You've done it correctly and you're done. But let's say something crazy happens in the world. And let's say, for instance, this breaks out and it actually goes down for the sell. But we got in for the buy. You want to set what is called a stop loss. Okay? Stop loss. I want to stop my loss. If this market comes down, I'm going to stop my loss. I want to get out the trade right here. You ain't going to take all my money. I put my $500 or $1,000 or whatever it is in the market. You're not going to take all my money. I want you to take me out of the market if price turns around and comes back down. But if price goes up, I want you to take me up to my take profit. And I'm going to set my take profit up here. Okay, so we have what we call take profit, and we have a stop loss, which is the one thing in the market that you can control. The one thing that you can control is how much you lose. Because you are going to lose, guys. I'm just letting you know. Okay, but me as a mentor, that I am meant to guide you, and my team and my community is meant to guide you on making those losses a lot less. Okay, so we have set our stop loss and we've set our take profit. Okay, so we have our numbers. So our take profit is 149,600. 149.600, and let's say our stop loss is going to be 149,000. All right, now you say, well, where do I put these numbers? Well, let's head over to our app, which is free for you to download, because we can actually walk through some trades when we get on our session. But we're going to put in we're going to put in our parameters, okay? Guys, so we are at our app. Now, app looks just like this. MetaTrader 4, as you can see it right here. MetaTrader 4. And we're going to tap it, and we come into it, and this is called our quote screen. Now, remember, we were looking at USD/JPY. So here we go, right here. We have to find it on our list. So we have USD/JPY. We're going to click New Order. So once we click New Order, let's bring this lot size down. And all right, so we're getting into this particular trade for $1. I know that looks like 10 cents,
but it is not. 0.10 represents a dollar. Okay, so you'll learn about lots and all that stuff. We'll learn about that in another session, but we just want to get into the trade. Now, remember, we said that we were getting into the market for a buy. Okay, and we said our number was going to be our take profit, where we thought the market was going, was 149.600. All right. And then we said if the market goes south, we want to put our stop loss in because we don't want to lose our money. So we're going to get in for 149.000. Now, the beautiful thing about trading is we're going to be taken out of the market either way. Okay? And what I mean by that is this. When the market goes up for its buy, we'll be taken out of the market in profit. Okay? We made our profit. We didn't have to sit here and look at the chart. We made our profit. If the market goes down against us, we're still going to be taken out of the trade, but we're going to be taken out and not lose all our money because we set our stop loss and our safety net in place. All right, remember, we said we were going up for a buy, so we're going to click buy by market. Here we are right here. All right, and we're going to click buy. All right, we are in the trade. All right, we see that our number is fluctuating right here. If it's negative $1.34, that just means that the broker has to get their spread first, which may be like, 1-3% of your trade or whatever. It's very minimal, but it is going to fluctuate in price. But let's say, just for the sake of demonstration, let's say we got into the market and we clicked the wrong thing. If we click the wrong thing, we can actually close the trade out. We just click it and we just click close order. Okay? And we can just get out of the trade. All right? So that is it. We are in our trade. We don't have to look at the chart anymore. We've set everything up. We're done. Okay?
All right, guys. So what we talked about today, I went over my time, but what we talked about today is the 3 ways that the market moves. Okay, we got our trade in. 3 ways that the market moves. We move up, we move down, and we move sideways, which is called consolidating and ranging. We learned that. Okay, we learned that number 1, USD JPY is our currency pair that we looked at. Now, speaking of that, we can trade several things. This is gold. We can trade the Dow Jones. We can trade S&P. We can trade NAS 100. There's several things. We can trade oil. This is silver. We can trade several different things. Copper. You can trade Amazon. You can trade stocks. You can trade anything you want. Same principle. Same principle. Okay? It's that when you're reading the chart, it's the same principle for everything. So now you're feeling accomplished because you at least know how to look at the chart and know that green or blue represents buying, red represents selling, and as a trader, you make money both ways. And when a market is ranging, you need to be a little bit more advanced to get into those type of markets, but you can make money in that way as well. Okay, we learned that we have different time frames which would change these candlesticks. So let's go up to the 4 hour. Oh, where's my chart? Good Lord. All right. So 4 hour. Ooh, look at that long candle. Okay. Same thing. That's what the market was doing for 4 hours. Same thing. It doesn't matter. It's small, it's fat, it's long. It's what the market was doing for that moment in time. It was buying for 4 hours. It was selling for 4 hours. Okay. Now, my goal is to not for you to look at these charts all day. My goal is for you to be able to come to the chart, analyze it, put your parameters in, and you're done. Okay. You're done. You make your money, you're done. Of course, you're going to look at it because you did it from your phone, but you're done. Okay? So The other thing that we learned that we can trade anything, any pair. Look at this, GBP USD. Okay. Also, remember that time that we looked at, that move that we looked at? Let's say it was a move like this, and I think it was 77 pips. Okay. A move like this was like 77 pips. I'm not going to say exact, but I'm just saying the move from here to here on the other time frame, which was a 15-minute, was 77 pips. Can we all agree that, from here to here was about the distance that it moved on the 15-minute? Well, on the 4-hour, the same thing would be 194 pips. But remember, we're on a higher time frame. So moves on a higher time frame take longer, take 6 days to make the money, but it is a larger move in money. So you could have made 10 cents could have been $19. $10 could have been, where I'm going. Exactly. I know the math is mathing. Okay. So our bigger moves are on our higher time frames. Let's say we're on the 1 minute. So let's say from here to here, this is a beautiful uptrend because I want to show you this overall move is going up. Yes, it took a breath. It pulled back. But this overall move is going up. Okay. Going up, 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 up. Now, this move from here to here, it's only 7 pips. Okay. 7 pips because we're on a smaller time frame. The move took place 7 pips, 48 minutes. That's not really a whole lot of pips. But there are people that capitalize and do a higher lot size. So let's say somebody came in on a higher lot size. Somebody came in with $1,000 at 7 pips. Hey, yeah, they made some serious cash, in this short move. Okay? All right, guys. So we are going to go. We're going to wrap. I hope you learned something. I hope that you would, continue this journey. Trading is 80% mindset, guys, in psychology, 20% skill. So once you get the skill, the mentality that you have to have in this market is truly, truly, truly important because the money comes very, very fast, but you have to know how to compound it. You need to know how to capitalize on your trading. And you also need to have a good community, a good mentor. I don't care if that mentor is me or anyone else, but you need to have that. Okay. You definitely need to have that because it is mindset, 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 mindset. Let me put myself back on the screen. I want to say goodbye to you. Oh, excuse me. I've enjoyed teaching you today. You guys got me coughing. I enjoyed teaching you today, and I look forward to seeing you. Can't wait till you begin this amazing journey. It's amazing. It truly is. So let's talk. Let's get, excuse me. Let's get on a session and let's chit chat. And you learned something today. You've been empowered. You can now look at the charts, Hunted. All right, guys. So I hope you have an amazing, amazing day. Radical blessings to you and your family. This is Babe Savage. Bye for now.